In our world where electric cars might dominate the roads, Tesla stands out as a symbol of innovation. However, even the most innovative ideas encounter challenges. From the groundbreaking Cybertruck to recent financial setbacks, let's delve into the challenges faced by Tesla. The future is electric. With these words, Tesla sparked a revolution in the automotive industry. Ever wondered how cars can be both eco-friendly and super cool? That's the magic of Tesla. Like a modern-day marvel, turning dreams into eco-friendly rides. How do they do it? Let's uncover the magic behind Tesla's electric revolution. It all started in 2003. There were two friends named Martin and Mark. They had a big dream to make the Earth a better place by changing how we moved around. So they decided to start a company called Tesla. Then, Elon Musk, a visionary entrepreneur, joined in 2004, seeing the potential and investing big. Facing a challenge in 2008, Musk stepped up as CEO, guiding Tesla through tough times. Despite hurdles, they launched the cool and fast Tesla Roadster, proving electric cars could rock. With Martin and Mark leading, they expanded, unveiling the stylish and long-range Model S in 2012. This shifted perceptions, showing electric cars could be the best. Success grew with the Model X, packed with innovations. Tesla's commitment to eco-friendly cars gained fans worldwide, inspiring others to follow suit. Then in 2017, they made electric cars affordable with the Model 3, and in 2020, the Model Y. This made electric cars mainstream, sparking a revolution in transportation. In between 2017 and 2020, Tesla shook things up again with a new creation called the Cybertruck. Everyone was buzzing with excitement about this tough-as-nails truck. Elon Musk, the brain behind the Cybertruck, promised it would hit the roads by late 2021 and cost about $39,900. But as often happens with big plans, there were bumps along the way, and the Cybertruck turned out to be trickier than expected, causing delays. Some experts even wondered if the design was up to start for mass production. However, at the launch event of the Cybertruck in 2019, Elon Musk wanted to show everyone how tough the Cybertruck was. So he asked his top designer, Franz Wilhelmsen, to help him out. Franz took a steel ball and threw it at the truck's window, but instead of staying strong, the glass broke. Everyone was in shock, including Elon Musk and Franz. It was not what they expected at all. But Elon didn't get mad. Instead, he made a joke. "Oops, maybe that's a little too hard," he said with a grin. Even though the glass broke, Elon wanted everyone to know that the Cybertruck's armor glass was still really strong, stronger than any regular car's windows. But still, it was embarrassing for the company. They had told everyone that the windows couldn't break, and now they had to fix the problem. After that, the company fixed the issue and the first Cybertruck was finally rolled out in July of 2023. As more Cybertrucks hit the street, more problems surfaced. The starting price was way higher than expected, and some fancy features didn't work as promised. People noticed rust on the supposedly rust-proof body. Some even had scary moments when the truck's system went haywire while driving. Things took a turn for the worse in April of 2024, when Tesla had to recall all Cybertrucks due to a dangerous issue with the accelerator pedal. While Tesla grapples with these issues, Chinese manufacturers like BYD and NIO are surging ahead. They offer stylish, affordable electric cars that are becoming increasingly popular globally. Some analysts even predict Chinese manufacturers could soon overtake Tesla in terms of global sales. To combat its recent struggles, Tesla made the difficult decision to lay off more than 10% of its workforce. Two key executives, Drew Baglino, who was in charge of developing batteries, and Rohan Patel, who handled public policy, also recently left the company. These layoffs have raised questions about Tesla's future strategy. Some wonder if the board will push Elon to become less focused on ambitious side projects like Robo Taxis and prioritize getting Tesla's core production and quality control back on track. But despite these layoffs, the number of people working at Tesla has gone up from around 100,000 to over 140,000 in just 2 years. Investors have mixed feelings about this. Some think it's a smart move to move Tesla's future, while others are concerned that the company might not be growing as fast as before. One reason for Tesla's struggles might be the cancellation of a cheaper car they promised to make. Investors were counting on this car to help Tesla become even more popular, but now it seems like that might not happen at all. The brain behind Tesla, Musk, has been a big dreamer of these cars. He wants Tesla to have a bunch of them, like Airbnb has lots of homes for rent, or like Uber has lots of drivers. Some of these cars will belong to Tesla, and some might belong to irregular people who let Tesla use their cars when they're not using them. People who share their cars could earn money from it. But this idea isn't ready yet. Right now, Tesla's cars can't even drive themselves completely. They still need someone to be ready to take control if something goes wrong. And sometimes there have been accidents with Tesla's self-driving systems, which have caused some legal problems. Due to these problems faced by Tesla in innovating new cars, other companies like Toyota and General Motors have been doing far better. Even companies like BP, who invested heavily in EV charging stations, had to adjust due to slower than anticipated EV adoption. If Tesla continues losing ground to established automakers and innovative Chinese rivals, the board may pressure Musk to adapt his approach or even explore strategic partnerships. They're hoping to turn things around by cutting costs and finding new ways to grow, but only time will tell if their plans will work out. It's clear that Tesla has faced tough times recently. Their sales dropped by 9% in the first 3 months of this year, the biggest dip since 2012. This meant less money for Tesla and their stock prices fell. But there's a glimmer of hope. Tesla's CEO, Elon Musk, told investors they might roll out a new, cheaper electric car sooner than expected. This perked up investor spirits, and Tesla's stock prices bounced back. Now let's focus on numbers. Tesla was expected to make 51 cents per share, but they only made 45 cents. Analysts thought they'd rake out about $22.15 billion, but they only hit $21.30 billion. It's less than last year and the last 3 months of 2023. Then, Musk shared some exciting plans in which they might start making these new cars late this year or early next year, much earlier than planned. They're also thinking about teaming up with another big car company for self-driving tech. But Tesla's not out of the woods yet. They think sales won't grow as fast this year. Their stock already dropped by over 40% this year due to worries about competition and price cuts. Still, however, Tesla's charging ahead. They're cooking up new cars and even teased a Robo Taxi service. Plus, they're doubling down on renewable energy, with their energy division making more dough than last year. But what do you think about this? Tell us down in the comment section below.